How's everyone doing? Happy Monday. It's 6 p.m. I asked the FSD to take me home tonight, so we're continuing our series of puns with music. What a great song. 80s music, synth pop era. It was a good era for music. You can think clearly with this kind of music. You actually understand the words too. So, for those of us that grew up in the 80s, can't go wrong with Eddie Money taking me home tonight, right? Jane Street's gonna take me home tonight. We're gonna talk about Jane Street. All right. So, by the way, before we get into that, if you're married, have a girlfriend, buy flowers randomly. Just buy flowers randomly, okay? Just do that. That's the alpha for the day, okay? This is like what you're supposed to go do. They don't teach this in the CFA program. I'm telling you now, is what you're supposed to go do. Especially entrepreneurs, founders, so focused, it's hard to zoom out. Go buy flowers, okay? You can do magic. Cards also, I mean, I don't like buying cards. I don't like writing cards either, but you know, what matters is the impact. That's what matters, okay? So think about those things too. All right, let's get to it. There are a few topics we want to get to. The U.S. consumer, quality stocks, insurance, healthcare. I saw my cardiologist today too. We'll see how much I can cover in the next 15 minutes. We'll go quick. So first off, start with the health cardiology tip today. So I spoke with a super smart cardiologist. The number one leading cause of death is cardiovascular disease. So keep that in mind. Number one leading cause of death. And it's also the most preventable through behavioral change around diet, nutrition, exercise, okay? So the trade-off that most individuals have to make is between going down a path of insulin resistance, which can lead to pre-diabetes, diabetes, and all sorts of bad things, or going down the path of atherosclerosis, plaque buildup, heart disease, heart attack, or stroke, okay? Both of these are variations on cardiovascular disease. What drives a lot of that difference is diet and exercise, okay? On the diet side, if you have more protein, we should all have high levels of protein. We don't have enough protein, especially the older you need more protein, bone density, okay? If you have protein with saturated fat, then you have more risk going down the atherosclerosis path. If you have more carbohydrate, pastas, you have more risk going down the insulin resistance path, okay? So these are the trade-offs. This is the fork in the road. For me, I'm better off going down the carbohydrate path, and obviously the better carbohydrates you can pick, and you can think about how you eat in what order to minimize your blood sugar spike, or what's called your glycemic response, and there are tools that you can use to measure that in real time, like a glucose continuous monitoring device, although common sense will take you a long way too, the timing when your meals are, okay? So people have different biologies. Some people can handle saturated fat a lot better than like I can. I did this carnivore diet in 2021. That was one of my COVID things. I felt great. I was having steak and eggs. I was cooking them sous vide. I had the reverse sear mastered. I had my grill in the backyard. It was amazing. I can still make a pretty great steak today, but my LDLs went just all in the wrong direction. And I also had I had calcium buildup, which is a predictor, but non-determinative predictor of plaque. In fact, quick digression, there are people that have zero evidence of plaque who can spontaneously have a cardiac event, and the people have significant evidence of, say, calcium buildup and also have a cardiac event. So cardiovascular disease is a very tricky one, okay? A lot of it's about best practices. One other thing, so there's a lot of debate around statins. I get adverse effects from statins. I feel like old. I feel soreness, joint issues. It does have this inflammation benefit. It reduces C-reactive proteins, which when interacting with LDLs can oxidize them, and that can lead to plaque. Okay, so, but I'm trying this new approach, which is called a PCSK9 inhibitor. You can talk to your doctor about it. It's via injection, but it doesn't have the side effects of a statin. So think about that. You don't have to deal with the controversies of a statin or not. My view is they probably are okay based on what the leading concierge doctors who are highly incentivized to get that right. I believe they're okay. But I am trying this other approach, these PCSK9 inhibitors. And of course, one of the most important things you can do is just exercise, because that's a great way to clear out excess LDLs. LDLs are actually a form of energy. If you have too many of them, then they can overwhelm your HDLs that clear them out. So, you know, if you could exercise in a pill, it would be a blockbuster drug. That company that manufactures it would be worth more than Eli Lilly or Nvidia. It's like, it really is that important. And everyone knows this intellectually, but adherence is another issue. My doctor and I talked about, he has 3 kids like I do too. And so you just got to go in the morning. Just got to go in the morning, knock it out, get it done. Not only that, something better than nothing. You don't need the perfect workout. Like jumping jacks 15 minutes, push-ups, even just walking uphill, listening to something. That can be productive too, right? So that's my health tip. I am very passionate about health and longevity. I do think people are going to live longer than we all think, and that has significant consequences on what you should invest in. It's why I talk about senior living care as a theme, especially in private markets. Continue to be on the lookout for an opportunity there. Aging demographics, I think, are a big theme. I'm invested in travel and leisure that continues to do well. Look at like TNL, look at Expedia. That category, I think, overall do well. Airline stocks are doing well too. So, but yeah, thinking through what the implications are of an aging population, I think is significant. Healthcare stocks have been doing very well. They took a breather today as a lot of beaten down names, including Mag 7, rallied, and winners year to date took a step back. That also included like small caps. Okay, those are a nice transition there. So a few thoughts. This is a Jane Street market. I can see it. It's very obvious to us now. We just see it in the factors. So my last FSD, I talked about the factor kill box. There's also the factor reward box. It's almost like a monopoly. You have the community chest card, which is mostly good news. You know, bank error in your favor, collect $100, versus the chance card, which sometimes is good, but often bad. It's like, go directly to jail, do not pass go, do not collect $200. Okay, factors are like that too. There's the factor trifecta penalty box of doom box, and then there's the factor reward box, and we see it. I mean, it is playing an extraordinary role in driving the market. Let me put this in perspective. Jane Street makes more money than Goldman Sachs. It's a much younger institution than Goldman Sachs. It's got a lot of younger people than people at Goldman Sachs too. But the move is really front-running Jane Street. That's the move. Now they got a lot of short-term market making going on, but that only ties up a certain component of capital. You don't actually need that much capital if you're providing inventory, creating liquidity to both sides of the market. You just have to have enough for bid and offer. Okay? So that's a thought there. I'm going to roll out in the Illumina app. We're actually going to create this feature. We're going to call it the factor kill box, and then the factor reward box. Maybe we'll find a better name for it, but it'll be in the app soon. We can see which factors are having these effects. Those factors can change from time to time. There was a big factor shift after Tariff-mageddon in April of last year, where a factor that was decidedly negative became decidedly positive. It's very overwhelming to the other factors. It's very decisive as a kind of factor. And anyway, so stay tuned for that. You know, I shared in our Telegram group that the strategies are outperforming like everything, including like fundamental analysis, thematic, and all this stuff. Like strategies are combinations of factors. They work in concert. And so we built a bunch of these strategies. They're in the Lumina app. You can see them at any time. You can see anything they hold. You can see when they bought, when they sold. There's a track record there in real time posted. You can log it yourself. If you don't believe me, just take a screenshot and you can see the gain loss in each position. So these factor strategies are quite powerful. I do think they're going to transform investing, and we're just scratching the surface on this. Like we still have a lot more to do, but the research findings we're getting are accelerating. So here's one finding for you. It's really a lot of funny, interesting little findings we have. I'll have to do a long form podcast sharing this with you, but I would say I would expect things in the communication sector to start to do well once that turns. I'm not saying go get involved now, but the communication sector, that whole sector ETF, there are just so many breakdowns happening there. The breadth is just so bad that you probably could see some mean reversion there, in the same way that you saw healthcare do well after May of last year with all the United Health debacle. On the momentum side, we're seeing momentum broaden and a move away from semis, actually. I still own semis, by the way. Actually, I bought DRAM. We added to that position today. Wish me luck. Pray for me. No, I'm kidding. I think it'll be okay. As I said, earnings are still fine. And as long as the leaders have good trends, I think they'll be okay. They break trends, you wanna worry about that. Here's another one, another quant tip. Buy stocks before they report earnings. Like try to get in like 2 weeks before they report. That's usually winning strategy. So banks will start reporting the second week of July. That's just upon us. Interestingly, when I look at like the bank fundamentals, they're strong. They're very strong, right? Banks are a bet on the U.S. economy. U.S. banks are, and the economy is strong. So banks are doing well. Banks are lending. Banks are getting paid back in their loans. There's not much credit risk out there. Mortgage season is upon us soon. That'll help lift to the banks. The technicals in the banks just generally look pretty weak and terrible. By the way, when OpenAI delayed their IPO, that hurt the two leading tech M&A bankers and IPO firms, Goldman Sachs and Morgan Stanley. So technically they look terrible, but maybe you get a turn there. It's possible, especially with bank earnings season coming up. Continue to see a lot of strength in biotech and healthcare small caps. There's a lot going on in those areas, and it's still a market where winners keep winning and losers keep losing. So be careful about trying to buy the dip. We're doing a lot of work actually trying to formalize that. Like, when exactly do you buy the dip? What do you look for? And can you quantify that and make that mechanical? Here's a funny thing. I talked about this last month, I believe. I mentioned that we built an LLM and we trained it to read. There's this concept of a breakout and a breakdown. So we fed it a bunch of examples. We fed it some other data too. And so it identifies these breakouts. It is the best performing strategy we have. It's wild. Initially, we only allocated 25 bips to these names, even like 10 basis points, because when you test a strategy out of time, it has the most risk, okay? Because there can be implicit curve fitting. But they've worked really well. Not every single trade, definitely not, but on average, as a strategy, it's worked very, very well. If we could go back in time and dial up those allocations, we would do that. In fact, we're doing that now, okay? So I think the power of AI is very real, and it is going to be highly disruptive to investing. So either you're part of that disruption and you're enabling that disruption, participating in it, or you're gonna get eaten up. I can see it. It's very obvious because I'm in the front row seat. We're looking at it. We're looking at the research. We're seeing what's happening out there. And the LLM costs and cost of inference are dropping, right? China inference models are growing in usage and lowering in cost. So more to come on that. We have this event tomorrow night if you're in New York. We're already at 70 people, which is our capacity, by the way. So that came together very quickly. Thank you for joining.
Dinner just started.
My son just showed up here to remind me dinner's here. You want to say hello to my friends?
Hello.
That was a lot of energy. How was your day today? You have a good day?
Good.
All right, folks, I got to run. Take care now. Make it a great day. Be well. So try to RSVP for the event. It's tomorrow night. It's another Penthouse social event. We're going to have a lot of fun. You're going to meet some people on the team. Got some really great people there. This guy not going to be there. But anyway, I'll see you guys later. Take care now. Be well. Cheers.